Okay, let's just jump right in. If you're operating anywhere in the rapidly evolving Indian fintech space right now, you know things are moving fast. Breakneck speed, really. But as you probably know, with that incredible speed comes a pretty massive target on your back, not to mention the very watchful eye of the regulator. So, welcome to today's explainer. We're going to take the headache out of regulatory compliance by completely demystifying the RBI Information Security Audit. Now, I want you to think about this perspective from the Cyber Ambassador framework for a second. Compliance is the foundation of growth. It is just so easy to look at regulatory compliance as this massive, tedious burden, right? Just a box-checking exercise. But honestly, in the financial world, strong compliance is actually the very thing that enables a business to securely scale. I mean, you can't build a massive fintech skyscraper on a cracked foundation. So here's our quick roadmap for this explainer. First, we'll hit the fintech security mandate. 2, the risks of non-compliance. 3, we'll walk through a 7-step audit roadmap. 4, we'll look at specialized RBI audit categories. And finally, 5, the benefits of true compliance. All right, let's kick things off with Section 1, the fintech security mandate, and really understanding the RBI's core requirement. So what exactly are we dealing with here? Well, the RBI Information Security, or IS, audit isn't just a nice-to-have, it's a strict, mandatory regulatory hurdle. Basically, auditors are coming in to measure your IT environment against some seriously stringent frameworks. They want to make sure your data integrity, your customer privacy, and your transaction security are absolutely locked down. We're talking about the absolute gold standard for national financial security here. Which brings us to Section 2. The risks of non-compliance and the incredibly high stakes of financial security. Look, what actually happens if you miss the mark? Operating with outdated security, missing controls, vulnerable mobile apps, or using third-party cloud partners without doing your required due diligence, that is literally a recipe for disaster. To counter this, the RBI mandates what they call defense in depth. It's a layered approach. If one security layer fails, there's another one right behind it ready to stop the threat. Because if you're stuck operating with outdated security, the consequences are severe. No joke. The RBI can slap you with heavy regulatory sanctions. We're talking massive penalties, bans on onboarding new customers, or even those devastating stop business orders that literally revoke your operating licenses. And then, of course, there's the direct financial risk. A single breach can lead to massive theft of customer funds. Finally, there's the absolute nightmare scenario, systemic failure. Just one single weak link in your supply chain can compromise your entire core banking system. Let's shift gears to the solution. Section 3, the 7-step audit roadmap, and how you actually build your digital fortress. So, how do we actually fix this? To turn all these abstract regulations into a real actionable journey, we can look at the Cyber Ambassador Compliance Framework. It's broken down into a rapid 7-step progression. We've got gap assessment, asset inventory, VAPT, identity and access management, disaster recovery review, incident response, and culminating in that all-important final audit report. Let's quickly break down exactly what happens at each stage. The journey kicks off with steps 1 and 2, which are really just about knowing exactly where you stand and what you have. The gap assessment benchmarks your current IT posture right up against the relevant RBI master directions. I mean, you can't fix what you don't know is broken, right? Then comes asset inventory and classification. This is where you identify all your critical information assets and classify them by sensitivity, so you know exactly what needs the heaviest protection. Okay, once you know what you have, you move to step 3, the VAPT and configuration audit. As a lot of you probably know, this is where you get to go on the offensive. You are ethically hacking into your own infrastructure to uncover flaws before the bad guys do. And at the same time, you're auditing the granular security configurations of your firewalls, your servers, and your databases, just making sure they are locked down tight. Moving on to step 4, which is identity and access management. Here, the auditors want to see hard, verifiable proof that you have strict least privilege controls in place. When you combine that with ubiquitous multi-factor authentication, you're essentially proving that even if some credentials do get compromised, attackers still won't have the keys to the kingdom. But hey, let's be real, no system is 100% impenetrable. And that brings us to step 5, the disaster recovery review. It isn't just about trying to prevent an attack. It's about proving you can bounce back fast if the absolute worst actually happens. This step tests your business continuity and DR plans to guarantee that if a cyber incident takes you offline, you can recover operations rapidly and securely. Finally, steps 6 and 7 bring it all home. The incident response audit evaluates your ability to detect, report, and mitigate breaches within those famously strict RBI timelines. Once all of that is evaluated and remediated, you get the ultimate proof of your strength, a comprehensive, audit-ready final report. This includes an executive summary and all the technical evidence, packaged up and ready for submission to the RBI. All right, Section 4, Specialized RBI Audit Categories, tailoring security to institution type. Now, keep in mind, this roadmap isn't just a one-size-fits-all kind of deal. Depending on the exact type of entity you are, the audit focuses on specific mandates. For instance, NBFC audits are specialized for both small and large-tier non-banking financial companies. Then you've got PSO audits, which require mandatory system audit reports, or SARs, specifically tailored for payment aggregators, payment gateways, and PPI issuers. And, of course, if you're running modern cloud-hosted financial apps, there are specific cloud security audits. These ensure you are absolutely meeting the RBI's strict data localization requirements, meaning quite literally, Indian financial data stays physically inside India. Which perfectly sets up our final section, Section 5, the benefits of true compliance, moving from a burden to a real business advantage. When you actually embrace this framework, the tangible business benefits are just enormous. First and foremost, obviously, you protect your banking license and you stay in the good graces of the regulator. But you also heavily mitigate your financial risk by proactively fixing flaws that could lead to digital fraud. Plus, you build this deep, unshakable trust with both investors and customers when you can confidently prove your platform is secured by top-tier experts. And finally, you ensure real operational resilience, hardening your business against stuff like ransomware and DDoS attacks that could otherwise just completely paralyze your services. The whole core philosophy of this framework is that RBI compliance shouldn't just be some defensive, annoying checklist. It is really about building a true security-first culture. By turning complex regulatory mandates into a clear, step-by-step roadmap, compliance actually becomes a huge enabler of business growth rather than just a bottleneck holding you back. So, as we wrap up this explainer, I want to leave you with one final thought to chew on regarding your own operations. Ask yourself, is your financial infrastructure a truly resilient fortress, or is it just waiting for a single weak link to break? Security isn't a destination, you guys. It's a continuous practice. It's time to stop guessing and start securing. Thanks so much for joining me on this deep dive, and hey, here's to tackling your next compliance milestone head-on.